from the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today, I'm very pleased joining me, Peter Curk, CEO and CPO of Iconomi. Peter, thank you very much for being on the show here with me today. The way I love to do it is I keep it to my guests to introduce themselves. Tell us a little bit more about you, your background, your journey, and what you're currently up to. So the floor is yours.
Yeah, thanks for having me. It's a pleasure to be here. As I said, I'm leading the team at Iconomi. Some pronounce it as Iconomi. We are basically a crypto platform made for any kind of tokenized assets and investment strategies. Otherwise, I'm a family father, a motorbike driver, and currently approaching my 50s, so I've seen enough of different businesses. My past comes from actually business. I'm not that much technology oriented. Been working in retail, energy, telecommunications is where I started. And in certain ways, telecommunications hypes and those times remember me a bit what crypto went through over the last decade. I'm happy to share any of my learnings.
Absolutely. Thank you again, Pete, for being with us here today. So, you know what? The first thing I want to start from is, tell me more about the economy, right? So, what's the story? I mean, and what was the motivation, let's say, to start the company?
Yeah, the company was founded in 2016. It came out of the need, and I can speak frankly about the user need, people approaching the founders of the company who were very much deep into crypto. Look, I'd like to buy some Bitcoins. And actually at those days, it was very, very difficult to do it because you need to be, skilled with some wallets, and usual people who are not that skilled could not do it. So they just said, oh, obviously there's a need for this. And they just created a company. And to add a layer on it, it was also very much seen that the revolution could come in a way that everybody could manage his own investment strategy by himself, not that, like in the traditional finance industry. So out of these two needs and ideas and visions, the company was born, which is currently, it's actually a crypto portfolio management platform. We are regulated in the UK and in the European Union, in the Netherlands, and we've been around since then, since the inception of the company. We also went at the early days through a phase of an asset management in sense, like crypto assets. Those were the wild days of the ICOs. But that side of the business is gone. I think that kind of a crypto industry, at least in Europe, is now gone. There's no way. We are more and more becoming a regulated financial institution. That's what the regulators in Europe want, and that's why we also now licensing or about to license the business for full digital assets management license.
That's cool. Now, talking about cryptos, and there's a lot of questions that can come to mind, right? So we know, the retail investors usually, when I say retail investors, like people like you, me, and and the rest, so they usually tend to be hesitant to go into this market, right? And they think it's complex. Sometimes they think, oh, okay, we don't know what to do exactly. And there's a lot of platforms, right? So what do you believe are the biggest barriers preventing them from getting started? They want to be there, but, there's something stopping them.
I think it's a lot of the last 8 years, and especially in those early days, there were a lot of, let me put it, fake projects, fake, tokens, and so on. And there were a lot of people on the retail market that got hurt. There were even a lot of scams, we can on one side. And on the other side, there were a lot of also quite some hacks in terms of the technology. It was very early stage, assets got lost, they got whatever in those protocol bridges over the protocols and so on and so forth. So I guess, and this became almost, I would call it a popular story, like a pop story. So everybody has a friend who got lost on crypto. He got something about crypto, and with a bit of a not positive experience. So I think today the consumers are okay to be very, very prudent about approaching the space. And I cannot blame anybody for having this attitude. Although approaching the space through players like Iconomi that is fully registered with the other national authorities or any other player that fulfills this criteria is nowadays very, very safe in terms of you're not going to be scammed. Of course, the asset class itself is still very volatile. It goes up and down, and this is the other side of the story. So how much money or your portfolio to allocate to such an asset class, which comes down really to your individual financial situation. Yeah.
Right. So like I like the flow, because this is actually exactly what I wanted to ask you. So, okay, so we get, to how to choose the right, I would say, market to go into, and all this. Now, as in any investment, Peter, so there are some risks, right? And it's very, to me at least, so I need to study and understand, how much risk I'm willing to take, right?
Exactly.
So from your experience and your perspective, if someone is today like hesitant, and they're not sure about which strategies they want to use, like, what are like the best ways to formulate kind of a personalized crypto investment strategy?
Yeah, because it's personalized, it's very hard to answer your question. But let's say for somebody approaching the space, the default strategy should be, should I buy some Bitcoins? And it's just a very simple question, yes or no. And then the next is, for how long should I be holding them? And that's what I always say should be the default strategy to compare any other strategy with. Yeah. So if I just buy Bitcoin and leave them there for 10 years, this is pretty much, let's say, HODL strategy. Would I make anything better if I start trading altcoins, going into DeFi, yield protocols, and other products that are present in the DeFi space or in the centralized space? Should I trade with margin? All this secondary questions really depend on what is someone's investment goal, how much skills, competencies, time somebody has to allocate to this. Because what is true about most investments, not only crypto, is that if you don't know, if you have to spend a lot of time about monitoring and then following your investment, then this means you did not invest, but you bought yourself a second job, an afternoon job. And usually, at least, it should be not trading, but it should be investing, which means money makes money. So what I would say should be a fixed and necessary component of any investment strategy is the take profit rules. Meaning, whatever you invest, whatever you decide, before just doing that, just make and clear up your mind about when are you going to take profits and what's going to be when you say, oh, that's good enough for me. I have enough this is what I wanted to reach. This is my goal. I'm taking the money off the table, or gradually taking it out, whatever. Just the key component is, yes, how much, and then it starts with how much will I be satisfied. If somebody postpones these decisions to after he's made the investment, especially in crypto, which is very volatile, then the emotion starts kicking in, and then a lot of stuff starts happening. People get scary about the downturns of the value. They sell maybe, and then there's an up. The value goes up, and then they start doing all the wrong things just because they did not really create their own strategy about what part of my money and I'm going to invest. Is it sensible part of my total investments, ownership, and then for how long, with which kind of profit goal, and then definitely studying a lot about the risks involved. In economy, we have different kind of strategies, investments, from most simple like index strategies that just index the top 25 coins, or to more sector-oriented DeFi strategies, to very altcoin-based strategies. It really depends then on what somebody has affinity and also is willing to follow. And
right. Absolutely. You just took like some points which are like really important, I believe, regarding first, you said, when we say crypto, people tend to think about the Bitcoin, or from what I've seen, people start to think about all these bad coins or altcoins that appeared and disappeared very fast, right? Now, what we start to see recently, and even, this was, for me, I wasn't surprised, but to many people, didn't wait to see, for example, Bitcoin ETFs, or even Ethereum ETFs, right? And, these ETFs, they start to gain attention. And, but some investors might be saying, okay, let's wait before we start this diversification in our portfolio, right? So why do you believe it's crucial to consider other digital assets now rather than just waiting?
Let me put it like this. Let's compare for a moment just an ETF, a single token, crypto token ETF, like a Bitcoin ETF, to just buying a Bitcoin on through Economy or any other regulated crypto exchange / broker. So why would somebody want to go into an ETF and not just buy a Bitcoin and then invest in it? So I guess it's more about convenience than it is about comparing just these two options. If you already have a brokerage account in the US, you just buy that, and there are, I guess, for US citizens some tax advantages maybe, and so on. But otherwise, there should be no reason why waiting for just buying an ETF. So the ETFs did, I think, is they gave legitimacy to these two at the moment assets, so Bitcoin and ETH. While we can see that there are a lot of exchange-traded products that are available to institutional investors already there, and they've been available to institutional investors and sophisticated investors for years now, but are not available to retail clients. So what we also see is that those institutional sophisticated investors started allocating portions of their investments to this space already years ago. So, and usually the rule is, that the institutional investors make money by being on the other side of the retail investors, meaning that if the institutional investors buy, usually there's some panic in the market, the prices go down, and the retail investors sell. That's pretty much the case for all asset classes. The non-educated investors simply don't have the knowledge, the time, and they're not professional investors. And that's why they usually lose money by being on the other side of the trade. So coming back to your question, the institutional guys already came into the space and much more than just Bitcoin years ago. through various forms, products that are only available to them. And so this should be a good indicator enough to say, okay, if they are in the space, then somebody could also make some money in other assets, not just Bitcoin. There are also some very specific market dynamics, at least from the fast cycles, what we can learn. So it's like, usually Bitcoin starts first, the value goes up, and then later it was followed by the altcoins. But again, these are very specific, crypto-specific market dynamics, which are non-educated investors will most probably not be informed of, and then they will most probably not make the right choices. That's why I say, and my not advice, but as I say, coming back to having a good strategy, it means like, let's add a single-digit percentage of my portfolio of all assets to crypto, and then let's just invest on a mid to long term, because there is a 4-year cycle in crypto, and anybody just speculating with those wild coins, if I call them so, might really get burned there. And this is also maybe a paradox of the space itself, because the main promise of crypto is 100x. People come with these expectations. I'll do 100x, and this is then what actually most of the times actually prevents them to do a decent return, because they are just keeping and just waiting for up, and they are not taking profits early enough.
Right. So it's like what they call it, greed, and right. So
greed and fear. Greed and fear. It's a very high-fast class, especially on retail. This is something people should be aware of.
Absolutely. Now, one thing that also comes to mind, of course, we repeated it, and we repeat actually, Peter, a couple of times now in this episode. Of course, the Bitcoin is the star, right? Like it's like the one that takes all the light. But of course, sometimes there will be some altcoins that comes up, which are like really good, right? So, and some of them no. So what's very known to be as shit coins, right? So, and the market was full of, and still I think sometimes we see these coins coming. So for me as a normal investor, a retail investor, how which criteria should I consider when I select, something, and how I can do the differentiation between a healthy asset and a potential scam?
Maybe this is something that actually Iconomi as a platform does as in its first step. So what we do is we scan all the tokens that are out there, and we only list on our platform tokens that we believe are good enough to be invested in. And they're now coming to the criteria for this. Definitely, it should be a project that's around. It has commitments in the development team. It has a growing community. It has some business value. Then there's the compliance side. So it should be a legal token, compliant with the national regulators and legislations. And then not to be underestimated as the liquidity side of it. So in bull markets when liquidity is high, almost, not all, but a lot of the shitcoins also get some liquidity. But when the market starts going down, the liquidity drains up very, very quickly. So what we do, and I believe also other registered or regulated players are doing, or at least I'm sure they should be doing, is already having a very high threshold on which coins, which tokens to allow the users to be bought. Because we as a platform don't want our users to be stuck with a coin they are not able to sell because nobody's buying it on the other side. So that's I think these are the key components. So, and you can imagine there are like thousands and thousands of tokens out there, and for investor, for retail, for some simple person to to do all these due diligences. So to go and check on GitHub what's happening with the development community, to check how many commitments and how many code is being developed, to check the token economics and the revenues, the usage data of a certain protocol, to check how much is a certain token traded on various different exchanges, not on one exchange, and then follow that daily liquidity and evaluate, is the liquidity going up, is the liquidity going down. And all of this is basically what a legit crypto platform nowadays will do, because it's simply managing these risks of cutting out of the market and out of the offering the potential shitcoins, as you name them, and only offer to the clients the tokens that have passed a due diligence stage. So if the platform doesn't do it for you, then you have to do it yourself, which just means you have to have a sincere passion to do that, because just to do it for one token, it takes hours.
Right. So do you offer that as a kind of a service? I mean, kind of a SaaS offering, Peter?
So our platform runs, so what we do, we list at the moment, I think, around 150 tokens, and we monitor all those tokens daily. So any token that starts fading, as I could say, so we start seeing that there's the liquidity on various markets is draining down. So we simply delist it, sell those assets, return the assets in ETH or Bitcoin to the users. So it's kind of a prevention, or already what we do for the users of our platform. But yeah, you're right. Our platform is completely run in SaaS and mode. So it's a cloud platform. It's accessible through either a web or browser or a mobile phone in the form of a mobile application. And it's part of the regular processes that we do as a crypto platform to really basically check which assets are on our platform.
Got it. And by the way, like what you just mentioned, Peter, is very important, I believe, because especially for someone who's a newbie, I mean, they're just starting to test water even in crypto. Funny enough, I was just talking to some people yesterday, and they said, "Oh, like we did something, we didn't study, we didn't know anything about the market, and then we lost, this amount of money." And it was not like it was not a small amount of money; it was a big one. And I think it's because just the main thing you just mentioned about checking the health of the asset, right? And people, I think they tend to not understand also few of the terms like liquidity and market stability, volatility also as well. So and this is, I think, where it's important for platforms like yourself to come and also offer that as a service, and at the same time help them choose the right portfolio, I would say. But now if I want to get a little bit more into from portfolio perspective, how do you help your customers to ensure that their portfolio are like really having like kind of resilient assets, like not maybe in the details, but on a high level, right?
So we as a platform don't go into giving individual financial advice, because this is not something
Right.
authorized to do, or neither is our service. What we can offer users is, as I said, this set of a safe environment, in the sense that we take care of the due diligence of the assets that are presented on the platform. That's one role that we take, and we also manage that role very actively. While we can, on the other side, just give users a lot of information to make sound decisions on one side. On the other side, what we can also do, we can basically push certain functionalities of the platform. And the one that we are pushing most is, and I will reconnect with what I started with. So it's the take profit functionality, meaning when a user onboards to the platform, he is invited to basically set his own take profit rules. So meaning that when the values will go up, and if the values of his investment or her investment will go up, he will take the profits out and then take them off the platform. So this is one side. And as I said before that, so the other side is the educational in the space. So by having regular market updates, by having deep dives into certain specific coins, by posting analysis. Just already, we have a very rich blog section and academy section on our platform. A very unique slide on the other side of our platform is also the social feed, where all the users post their own content and then they share it in the platform. And in there, somebody who is following a certain or investing into a certain portfolio can see the thinking of the other users about that portfolio and exchange opinions. So I think this is what we try to do. So I would say we are an enabler of this, and try not to give individual financial advice, because it's always very, very tricky, and it would require us to really individually sit down with a certain client, and then you have to analyze his wealth position. So it's not that simple. We have specialized partners that do that, and they actually use then our platform to not the partners, but basically financial advisors advise clients what to do, and then they can come to our platform. What we've developed over the last year is also a section of our platform which we called it's called Economy Wealth, that is actually tailored to these financial advisors and wealth managers. So where basically they open an account on the platform, and we take care of all the crypto-related business, compliance, and everything, while they only spend time on advising these clients on, how to invest, which portfolios to invest, and so on and so forth. And this is a B2B proposition that we as Economy have, and we believe strongly in it.
That's cool. Now, I want to come to something maybe you touched a little bit on it before, Peter, which is regulation, right? So regulation is currently a hot topic in the crypto world. So how are you seeing, this landscape is evolving now, and anything like me as a retail investor should be aware of? Because I know like your company is also like a registered platform. Like, of course, you follow some, and when I check the website, I can see you do KYCs and AMLs and all this. So what are we seeing in this space? And, how do you think all parties will benefit from this regulations?
Yeah, I mean, I have the luxury of seeing two sides of it very hands-on. I mean, we are present in the UK, and we see the regulatory approach that the UK is taking. And on the other side, we're also present in Netherlands, and we are part of broader European Union regulatory framework there. So, and I can daily compare the differences that these two regulators took. So I would say that, let me start maybe with the European side of the business. So the regulators there created a common framework that's going to be valid across all the member states, which was basically going to create a pretty unified market in Europe and level the playground of who can do business and which kind of business you can do in crypto in the European Union. So I think this is good, because the threshold of running such a business is increasing. You have to have more people, more detailed and sophisticated systems in place. Not everybody will be able to do it. On the other side, there's also like an element of consumer protection there, because if somebody is not going to be registered and having a license, the consumer will be very easy and very protected, as it would be really stupid to work with a business that's not licensed if it is a regulated business. Yeah, I mean a regulated industry. In the UK, we are still in a phase where most crypto businesses only have to comply strictly, very narrowly speaking, with AML legislation and so on. But and then you have the consumer protection laws in place. So the UK didn't start from regulating fully regulating the business, but it started from consumer protection. So the way we communicate there, it's restricted. It's much more similar to what you can communicate in terms of stock brokerage, stuff like this, how social media is used, and so on. So it's a combination of AML and consumer protection. Let me say, that's the angle from which the regulator started regulating it in the UK. So I think the European Union is going to be very fast because it's 1st of January that the regulatory framework steps in, at least in the Netherlands, where we have the company. While I believe that in the UK, it's going to take a bit of time. We have a new government, the policy might change and so on. So it's not such a clear regulatory outlook in the UK at the moment.
That's interesting. Really, your way, Peter, is really very easy to understand. Even I think someone very beginner, they can get from you, the ins and outs of navigating, these topics that we discussed with you today. So as we are almost coming to an end, final things, final advice maybe for people who are interested in cryptos and maybe even for fellow investors, and also where people can get in touch and get to know more about economy and about you, of course.
Yeah, I heard your audience is very diverse. So there are a lot of entrepreneurs also and tech is in there. So whomever would want to get in touch with me about the platform side or /B2B side of the business, feel free to reach out through LinkedIn. I think I'm a bit older guy, so I don't use the other social media channels that much, but I'm still my main business is actually LinkedIn. So more than happy to get in touch. While I think anybody just approaching the market should really feel free to check out our index strategies. I can mention maybe blockchain index. It's the longest running blockchain index strategy, I think, out there. I'm not sure, but it's been running since 2017. So it's been there on the market for 7 years, and it's simply indexing the market, the crypto market as a whole. I think it has a top 25 composition. So just entering the space with a very low frequency trading strategy, which rebalances once a month and just follows the market, might be an easy way to enter the market for somebody approaching the space. If somebody feels like ready for it, then he can also open an account and then just create his own strategy. Always more than happy to see these kind of users. So yeah, feel free to use us.
Cool, great, Peter. Really, I enjoyed the discussion. And as I was saying, you made it appear very smooth. And even if people goes to the website, they will understand exactly. Also everything is super clear and very straightforward. Thank you very much, Peter, for all the information you shared with us. So people, you can find the links for the website and Peter's LinkedIn account in the show notes if you're listening to us. If you're watching on YouTube, you can find it, of course, in the description. And as I say always, this is how I end my episodes. Thank you for passing by. If you are a first-time listener or viewer, I hope you enjoyed. If you did so, please give us a thumbs up and subscribe. Also share it with your friends and colleagues. And if you are one of the people who keeps coming to us, thank you for doing so. And thank you for all the encouragement and all the feedback that you sent to me. And as I say, thank you very much for tuning in. We'll meet again very soon. Thank you. Bye-bye.
Hit that subscribe button. Share the show with your tech-savvy friends and fellow entrepreneurs. And leave us a review on your favorite podcast app. Your support means the world to us.